Turkey's problems are so big that they will require something very special to short-circuit the crisis. The crisis is at the current stage for an exchange crisis. It will most likely mutate. It has the possibility of mutating into a credit crisis. Turkish corporations are heavily indebted in dollars. The central bank has the lowest level of net international reserves of all emerging markets. They have a very large current account deficit. That is, they need significant amount of funding from abroad just to stay in terms of spending where the economy is right now. And all of these things are hitting them together, in addition to the political crisis, a fight with Trump. So this is, it seems to us that this is very far from over.
Erdogan claims that this is a worldwide attack on his financial system. Is it an attack, or is it?
This is not an attack on Erdogan. Coming into 2018, there were two countries that were very exposed to monetary tightening from the United States. One is Argentina, who is a country that is very, very friendly to the United States and to the international financial community. And the other country was Turkey. Argentina already blew up. Argentina went to the IMF and obtained $50 billion. In some ways, Turkey's problems are larger than Argentina's, but they are not going to the IMF. They're not raising interest rates. So this is a classic emerging market crisis during a time of monetary tightening in the United States.
A lot of people are trying to draw parallels between today and the Thai baht crisis in '97 and the Russian ruble crisis in '98. What is your opinion about the parallels? Are they that strong, or not really?
There are similarities, but there are differences too. At that time, in 1997 and 1998, the entire world was on fixed exchange rates. Today, essentially, the entire emerging markets has floating exchange rates. So what you're going to see as the Turkish crisis continues to unfold, you're going to see especially weakness in emerging market currencies that are floating. But in terms of the balance sheet effects that you observed in Korea at that time, in Thailand, in the Philippines, they're very similar. That is, a lot of indebtedness in dollars and big depreciations on the currency, which makes matters much worse.
Could we have a banking crisis again in Europe because of this, because of exposure to Turkish foreign loans, et cetera?
I doubt that you're going to have a banking crisis in Europe. Turkey is a relatively small country, right? Clearly, the Spanish banks, some French banks have exposure to Turkey. I think that this is a problem for Europe as a whole because this year, November, the European Central Bank is going to end its bond purchasing program. So they would like to see private banks to step in and start to provide credit. So this comes at a time where the European economy is slowing down. The ECB will stop its very, very expansive monetary policy in terms of buying bonds. And they would like to see the banks. The banks are unlikely to step in and start to provide credit in this environment with Turkey.
Because it's so uncertain right now.
Absolutely.